Again, I implore you to remember, f your puts, f your calls. Jay Powell has you by the balls. God bless my money printer.
Oh, you gotta love it. Good job, Lee. Jay Powell. That's hilarious. All right, guys, we got a big show today. I am hotter than Hunter Biden's crack pipe. The Baba Yaga of the marketplace is back. Guys, we're going to look at some trades that are available right now, one of which I am in. I'm going to share that with you. We're going to go over some of the existing trades, go over all the markets, go over Bitcoin as well. I ask that you help support the channel, like and subscribe to this channel, and please do check out SimpleFX to help support this channel. If you're going to trade these markets, do it on a decentralized exchange. Been in business since 2014. Check them out, guys. With our link, you get up to a $5,000 instant deposit bonus, which is available for you to trade with instantly in your margin. So all that information is right there in the video description. I'll pin it in the YouTube comments. And if you want a traditional exchange, check out BingX for a traditional crypto exchange and dozens of altcoins as well. No VPN needed on BingX. Most importantly, both of them will pay for you to join our Discord. They will pay for your first month. So download one, message Lee in the Telegram. All that info, again, is in the video description. It'll be pinned in the comments. Message Lee. He'll get you set up on our Discord with 13,000 people and all of the trades that I post, as well as the other professional traders, the live streams, the education, the TA. It's all there, guys. It's all there for the having. So let's talk about what's going on. So sell in May and go away. Don't come back to Labor Day. Well, Warren Buffett took that advice. Warren Buffett, he sold 13 billion in stocks, bought treasuries. Why? Because he believes where market is getting lower. Whether he believes in the recession or not, the recession in my mind is 100% guaranteed, guys. I always say nothing's 100%, but every single indicator would have to be wrong that's been correct for 75 years to say we're not having a recession. I think as this year progresses, you'll see the government board come back and they'll tell you the recession, we're already in it right now. Some people think we've been in it for months, but we're already in it, and you're seeing it in the price action. And we're going to talk about the Nasdaq first on the chart. This one's important because I like this trade. I took this trade myself, 13,417. This is where the Nasdaq's at. This is the daily chart. Your 200's well below you. Tech's been on a rip, okay? And Google came out. Google's really holding this market up because the S&P's down today. Google came out and said what at their presser or at their event they just had? They said AI. AI. If you say AI, the people on TV get all excited. Oh, Google's going to make some advancements in AI, and all the investors get super excited. Retail piles in. Google pumped up. So the Nasdaq's floating right here, but it's right at my 1618 at 13,417. So there's some other reasons I like the Nasdaq here. Let's go ahead and look at this on a 3-day chart. 3-day chart, my 200 is now right on top of you at 13,417. But on top of that, you long-term subs know that I use a unique Fibonacci style based on Robert Fisher and Constance Brown. I use impulses and Fibonacci waves when I trade. Look at my 486, pulling it from the impulse on the way down here, down to my low, my absolute low so far. The 486 to the dollar. You see the red line on top of the yellow line? You can see it jumbled here. They're both 13,417. I like this area. Does that mean it has to stop there? No, but that means I'm willing to risk a certain amount and take a trade in this area. My upside risk here, guys, is 13,891 if we do pop up above this, okay? This is what I'm looking at here on the NASDAQ. I like this setup. Let's look at this back on the daily, and let's look at some other indicators here. So the NASDAQ. Money flow just crossed back into the bullish territory. We're waving up and down, waving up and down. When I look at my volume ratio, there's more people selling than buying. It is still bearish. Get off of that. And then here is our breadth of the NASDAQ. Okay, now remember, this is the NDX, the NASDAQ 100. So you're at 65% or above the 200-day moving average. To put this in perspective, because it doesn't mean a lot to a lot of people, when we were down lower in price, when we were at 12,718, you had the NASDAQ 100 85% 75% was above the 200 day. Okay. So price has gone up as more and more companies have gone down below the 200 out of the Nasdaq 100. Now, remember, the overall weighting in the S&P, you have Apple and Microsoft are now 17% weighted by cap. They're 17% of the S&P. So that's why it's important to look at the mega caps, look at what they're doing, because people talk about the sectors, the individual sectors. They're not really sectors. All that money is going to very few companies, and that's what's holding up the marketplace. So when they have their pops, what's the cap to their pops? We're going to look at Microsoft today too. What's the caps to their pops? Because they're going to pull back down. They're trading at premiums to the market going into a recession. Okay. So looking at, again, the NASDAQ, 13,417. This is where I like the price here. And as you can see, on a down day for the S&P, the Nasdaq still holding up at 13,367, which is why I'm sharing this one with you first, because I like this area for a trade. Looking at your targets back down to the downside, I would just simply look at my fibs, 13.2, 13,000, 12.9, and of course, bringing you back to that Wyckoff ceiling will be 12.7. Okay, those are the intermediate targets there. And let's go ahead and look at the S&P. Remember, going all the way back, here's the pivot pattern, all the way back to June of last year. The 41.43 has provided awesome trades with the one flyer up to 42.89. So once again, on the pivot pattern, here is our pivot. We had a couple hundred plus handle drops here on price. And look where you're stacking candles. Okay. You're stacking candles. Your price is 41.24 right now. And you have wicks getting above 41.43. Remember, our range is 41.43 to say 4,200 to round it up by 20 bucks. 41.43 to 41.80 is where you're getting all these nice trades at, and you're just stacking candles here as the index gets weaker as time goes on. Look at the problems happening in the banking sector. Look at Pac West. People got to understand when they say sell in May, go away, where does that expression come from? It's esoteric cycles. Okay, it's all about esoteric cycles. You look at the great financial crisis. When did Lehman fail? It failed in March. Fast forward to this bubble. When did, who was it fail for? Silicon Valley Bank fail. Silicon Valley Bank failed in March. Then Bear Stearns failed in the GFC. And then we had First Republic fail. Then we had some smaller banks, New York SIG as well. And now we have Pac West having problems. All of these things happen in cycles. This is why it's all predictable. The timing is the difficult piece to get. Anybody can do predictions. Well, I think the markets are going lower. Yeah, so do I. That's great. Where do you trade at? You never hear that from most people on YouTube or people on TV. Give me the actual trades. That's what we do on this channel. Oh, guys, as an aside, please follow us on Twitter. I'm going to put that's in the video description, but I'm going to pin it as well with this other information in the comments. Follow us on Twitter because I don't know if you guys are paying attention. So some of you are fans of Tucker Carlson. Some of you aren't. Probably most of you are. I am a big fan, but he's going to be doing a show on Twitter. So that's caused a lot of back channel talk that Elon's going to be doing some type of video platform to try to compete with YouTube. And if he does, I will be broadcasting on Twitter. We'll still use YouTube to post the videos as well. We got to see what he comes out with because I want to do live streams on Twitter, be able to engage with everybody, and have that component of free speech. Very important. So go ahead and follow us on Twitter. Not super active on there now, but I want you there so when we make that announcement, you guys all get it, and we'll have more engagement on Twitter as well. So give us a follow. All right, so S&P, guys, here's our targets again, 41.43 to 41.73. Again, just providing excellent trading opportunities. Look at the 45 angle off our low. Look how beautifully it held here. Fell below, stacked on it, got above it, fell back below it, stacking back on the 41.43. Now let's look at our market breadth on the S&P. Currently, only 47% of stocks are above their 200. So more than half the stocks are below their 200-day moving average. This is a narrow breadth rally. Narrow breadth rallies always fail. Doesn't mean they can't go up, but they always fail. You have to have a rally broaden out in breadth to really have movement in the market. And again, if you compare it to 71% last time you were in this area, you had 71% of the S&P above their 200 at this exact same price range, and now you have only 47% in this range. Okay, so the rally, this is why people keep asking me, how come we can't break out to the upside? Because less and less companies are participating in the rally. And again, if you look at this like termites in the structure of a house, the structure of the house, when you peel back the wood, is becoming weaker, it's becoming brittle, and at some point it's going to give way. That catalyst could be this debt ceiling debate. The catalyst could be another bank failing. There's so many bearish catalysts and so few bullish catalysts. Like I keep saying, all the risk is to the downside. The market has never bottomed ahead of a recession, not once in US market history. So your bottom is not in from October. If you do believe a recession's coming, which I think I can't believe people are still on the fence about that. But those people on TV want you to keep your money invested. By law, they have to be invested in the marketplace. They want to keep your money there. Okay. They want your money trapped. You got to understand, if a recession's coming, be like Warren Buffett. I'm not saying be like me. Be like Warren Buffett. Protect your wealth. That's priority number one. Protect your wealth so your kids can borrow it from you later and make you bankrupt. That's my family. Let's go ahead and look at this. All right, guys. So your money flow is bearish here on the money flow. As you can see, you're making series of lower highs. This is a daily chart. Volume ratio, there's more selling than buying. And again, we went over the market breadth. Let's jump to BTC because my BTC trade from, I guess, Friday was absolute fire. Let's look at this. So our BTC trade. Oh, doing it the wrong way. That's for support. We need it from up here. Let's look at the BTC trade here, and we pumped up. This is where we took our trade at what 29,660, 29,7, I think it got to. So we took it up here, and look at this drop, guys. A lot of guys are still in this on the Discord, holding on to this, but this was a nice trade. 10.44% move, a 10.44% move. And more importantly, looking at what BTC is doing here, again, you still have that macro double top structure. So you fell right back down to support. But you have the larger double top. You completed this smaller double top right here, and then you came down, you fell, and now you're holding your larger double top structure. So that's your next level down on BTC. Let's go ahead and get this for support like I was just trying to do. And you can see exactly where you fell, right to your 1 fib, 26,942. So you look at your 1618, 25,000, right back, showed you this last video, guys, right back to your top of your ceiling of Wyckoff is where you're looking to fall to, 25,000. You have a nice curve up here on your 200-day. Won't matter when the markets roll down. This is not an inflation hedge. Don't listen to people on TV. The same people, actually, it's a different set of people are talking about gold and silver. We're going to get into that. And I'm going to show you what gold and silver are doing because we talk about it all the time in the marketplace. But let's finish up BTC. I'm all over the place. MFI, guys, we're below, we're in bearish territory below the median line. So you have to watch this. Again, this is my picture of liquidity and risk in the marketplace. BTC really starts falling apart. You know, the risk off environment is coming, and people are going to be exiting, going to treasuries, going to money market funds, or sitting in cash, buying metals potentially, different things like that. But you're holding this range, and you want to see BTC get back above 26,942 if you want to be bullish. Just telling you guys, the macro market, there's no reason to be, I can give you 100 reasons to be bearish. The only reason I can give you to be bullish is so you can join in on some type of euphoric rally. But the problem is they're going to fade. Things are going to get worse, not better. You're seeing that in all the numbers that are coming out with the economy. We're at peak unemployment, meaning low unemployment. So we're at peak cycle in the economy, 3.4%, 54-year low. That's going to go up. We just had new jobless claims come in higher than expected, 260,000 versus 230,000. This is when it's starting to go, the meat grinder in May, guys. This is happening now in real time. So watch this. If anything, I'd just be looking for trading opportunities to get back into this. Nothing here because you're just holding this base right now. So you want to see how this plays out. But if we're just looking at some simple fib retracements, I don't do anything in Bitcoin without looking at what the other markets are doing, but I would be looking at 28,663 to 29,186 if this did rebound. But again, in confluence with what the markets are doing. I don't naked trade Bitcoin. You can see the series of lower highs happening now, but you got to hold the support area or more downside will come. Let's check out silver because silver, again, I posted this trade in the room last week as well as gold. And today silver had a massive 4.58% down move. This is a 3-day chart. 2-year chart here on silver was extremely bearish. I know the metal people keep telling you these charts are setting up to be very bullish. My thesis on metals, once again, I put out a metals video months ago going over this, is we're repeating the same cycle as the GFC. Most people don't know, but something like 80 or 90% of all trading in metals is controlled, the derivatives is controlled by JP Morgan and Citibank, okay? And what happened in the GFC? Silver went down 61%, gold went down 34%, both Fibonacci numbers, again, by the way. And so I think that same cycle will play out because people will sell metals, will get rid of the metals, not you guys, not me that has metals at home. I'm talking about professional traders, institutions that own these assets when they need liquidity, when they're losing money. I think that same cycle will play out, which is why we shorted up here at $26. So silver is now at 24.21. Massive, look at that bar, massive yellow bar down. So congratulations to everybody that's still in this trade. And guys, it's breaking support at the 618 at 24.27. You're coming back to the trend line. You're coming back to the trend line. And if you start losing this, again, looking at my downside targets, just revisiting this on a wave projection here, your one fib lands you at 17.42, which is your base. Okay. You sweep your base, your bias will be in a down market. I'm looking at $13 silver to $12 silver when the markets make a new low. Okay. Meaning they lose their October lows. I'm looking for the metals to also sweep these lows. And guys, this could be off by $1. We'll have more price action, be able to pull more fibs, and we have more candles. This is projections. Okay. But I'm looking at 12. Well, this says 12 to 13.83. So let's call it $12 to $14 silver, which is $10 to $12 lower than it is now. If this repeats the mini crash cycle, then it will go up extremely high and value off of that recovery point. Looking at gold, Gold, we shorted it, guys. I went over this in detail last video, so I'm not going to spend the same amount of time on it. Got above our 2055. Each previous time, we only had one candle on a 3-day chart. We'll see if that holds true. And if it does, you're looking at least a 20% down move in gold. But I think gold will be going much lower as well. But let's get our intermediate targets. So we shorted this. I got in this at 2058. It went up to 2067. It went all the way down to basically, what did that get down to? 2000, 2011 on this chart. So if we just take this from the impulse, let's look at our support areas in case gold continues to fall down. Looking down here, you have 1969, 1909, 1811 would be your base here, but you may be getting some chop in here just like this last distribution box, okay? So it's days. You see this? That was your spike up, what you just had here. And then after that, you had these are 3-day candles. So you could be chopping around in here for a while. What I'm curious to see, people are asking me about reentry points. We haven't had another candle get above 2055 after that initial impulse up. Remember, we had the pandemic scare here. We had the peak inflation scare here, and this could be whatever, the banking crisis scare, like we talked about. I'm curious to see if this gets back up to 2055 here at 2016, or if it just stays weak and chops around. I don't see a reentry point here that I'm interested in. I like to short assets off of pumps, not when they're going down. Okay, so that's what I'd be waiting for. NVIDIA. I love to say NVIDIA, and I love the grammar Nazis that like to correct me in the comments. But all right, guys. So again, this is the last tech stock to report. I think it's May 25th. It's the last big tech stock to report. Chopping around, we have our 618 target, our 1618 target, both at 288, 289. We got up to 291. My upside risk I had on this was 302. Let's just get rid of some of this. You can see this a little bit better. There we go. And actually, let's get rid of this one because this one has a better fib. There you go, 291 right here. So I still like this. This to me is looking toppy. You're above your Wyckoff range. I like this. We're getting a lot of volatility in NVIDIA. This moves quite a bit, right? $4, $5, $6, $7 sometimes just on these choppy moves. So we have guys intraday trading this as well. But this to me looks like you're going to end up making a bearish structure here on Wyckoff. Again, they report at the end of the month, and this company is up 100% this year. 100%. The natural halving and doubling in the marketplace. So I like this as a short up here at the top, obviously 291 with my risk up to that 302 area on an up move. Okay. But I think this is going to be a nice trade as time progresses and time goes by, because I believe our bottom in October was a $100 and you're going back to that bottom at some point. So this will be a great trade down the road. Let's look at Microsoft. Microsoft, again, looking at my geometric Gartley structure here, my double bottom structure, we got past the 1618. I posted a trade up here in this range, and I'm looking at this. Another way we can look at to see where is this, right? Because off my trend-based fib projection from my low, my high, and then my higher low, this gave me the 168, and we clearly went past it, but we didn't get to my upside risk of 323. So another technique you can use is fib projections off this wave, this breakout wave to the upside. Look what you got, the 1618 right at 312. You see that? Literally right at 312. So this range here, the 312 range, you're at 309. I like this range. I think what Microsoft's going to end up doing, look at your gap here. I think what Microsoft's going to end up doing, remember, this is Chat GPT. This is all the lemmings piling into the stock. Oh, we got to buy this stock. Everybody on CNBC pumping Microsoft, pumping big tech, pumping anything with AI. Microsoft's at a 30 PE, I believe. That's going to get cut in half come a recession. But look at this. So I think this is what you're going to do. You're going to end up making some type of double top. Just like this, your neckline will probably be very close to that 301, and then you'll be coming back down. Okay, I think if this range holds, this 312 range, and you're interested in a trade here, if I was to trade, this is the range I'll be looking at, that 312 range with my upside risk to that 323. Okay, so this range it's at now, I like it, but I do think there's more. I like to trade volatility. I like to trade things that can move a lot, because you may be in this for a little bit as the grinder continues, or it may start to break down because it's really overvalued for Chat GPT. You look at the divergence too. Money flow has just been a series of lower highs as price keeps rising. So you got divergence on this. I like this as a top area, guys. 312 area looks really good to me. Let's look at another. Well, Microsoft's not a garbage company, although I cannot stand their operating system. But First Solar certainly is a garbage company. But let's look at First Solar. People keep asking me, where can I re-add? A lot of people took this up here, 217, my 217 trading range. You got up to 221, and now you have this awesome drop, and you want to press it. Well, I've been waiting to see how the candles react, and you're making a Wyckoff structure down here. 618 at 181 seems to be, as of right now, holding as resistance. So that's an interesting area above that 181, and you can already see the Wyckoff structure here playing out. Here's your selling climax. And this is on the daily, guys. Then you had a reaction, but that reaction was disproportionate. You see that? Because of that hard sell-off. So I'm going to use that as your top. And that lines up right there with your 181. So this is going to, have it play out in the motions here. Your up thrust, your down thrust, back up to the upside. This could be an up thrust that comes back down again, just like this. Remember Wyckoff principles here. So if this shows a sign of weakness afterwards, and this may be the range, got to be patient. After you get a big win like this on a trade, guys, I want to see how the candles react, because if you're in a short and you start seeing it break out above 181, come back and hold 181, it's going to come back up and try to test 196, the bottom of your Wyckoff range, okay? But as of right now, that 181, 182 range, that looks like a good place where I would press my short if I was still in this trade. And let's look at MSTR. MicroStrategy, looking at it because it had a big down day today. Let me throw this on the daily real quick so we can see what that was. Yeah, almost 8%. This is why I like to trade MSTR. You get big moves, okay? And again, we had this defined trading range. I've shared with you multiple entries here, even on the daily, guys. 333, upside risk to 360. And of course, you're coming back down here. This moves with Bitcoin, very heavily correlated. I don't think Bitcoin is going to go up when the markets go down. If you are a new sub to this channel, not because I hate Bitcoin, because I love money. Okay, so I'm going to trade the direction I think assets are going to move to make as much money as possible, which is a strategy I would suggest everybody tries out sometime. Because if you have the same forecast as me, the market coming down, I do believe will be coming down to a bottom again. Mid-June is that target for the next bottom, then a rally up to August, just like last year, and then the final bottom in mid-October. Any of those time frames change, I will tell you guys, but as of right now, I'm looking at entries on shorts, posting these trades, trading multiple assets because I want to make as much money as possible in this bear market. You do have this big double top here, guys, that you formed as well here, even on the daily. Looking at your neckline, you're going to be around 280. If that starts breaking down, look for MicroStrategies to fall further. If Bitcoin rebounds because it's so parabolic, you could see MicroStrategies have another eight that had an 8% down move, could have an 8% up move. Watch that range 333, 360. Nothing I would do here. I wouldn't do anything here. I wouldn't short here. Short at resistance, okay? And then if it breaks through and then finds new resistance, rebounds, starts hitting its head on 273, that could be a potential place that I would add, okay? But right now, it's just printing in the lower quadrant of a bearish structure. Let it be. If you missed it, you missed it. You move on. So Google struck this fib perfectly. The 1618, it's holding up the market. 118. Again, looking at this, guys, Google, the upside on Google is limited. Looking at this again. So again, a mega cap tech stock. Ah, all right, so let's take a look at Google, guys. Look at Google. So Google struck the 161 I have laid out here perfectly, 118.37. I think, look, again, Google said AI. They said AI, and look at the stock. I mean, this is how euphoric people are about AI. It's keeping Nvidia up. It's keeping big tech up. The Nasdaq will be much more damaged today with the S&P being down if Google didn't have a move like this. All you have to do is say AI. I think it's going to top out here as well. Let me get some upside risk target here. If we go ahead and look at this at the 2058. 126.10. Okay. I'm not interested in doing anything here with Google. I do think there's better things to trade. You do have an uptrend here, a bullish uptrend, and you can see Google's been moving up, and you can see your upside here at 122 as well. Your own 17. I just think it's topping out soon. It's an AI pump. It's keeping the market up when it should be more down. Google being a massive mega cap tech stock. So this will fade, but that's what's keeping the market up. I want to show you guys that as well. Let's look at DAX. DAX is still chopping around in range. Again, 15,733, 15,974. This is a defined trading range here on the daily time frame. We have guys trading some of these intraday moves. This will start capitulating when you really see the S&P start breaking down, and the DAX has a lot of territory to give up. I do believe your ECB, Christine Lagarde, said they're going to be raising rates again. I think twice now that she said they were going to pause, and they've had to raise since that discussion. So that's the DAX, guys. When this starts breaking structure at 15,733, you'll see a bit more downside. If you do want to take trades in this, I would look up at that 15,974. Your upside risk is still going to be 16.2. Last one, wrapping this up, CAC. Nailed this trade. 75, 79 was your top. You came down, and this is your grid you're in, 73.26. So you can see this, right? So basically, if this holds at all, you're looking, this is a weekly chart now, but you're looking at a roll up, okay, on the weekly time frame. If you get a double top type structure, let's go ahead and put this a little bit more realistic. Let's look at the 3-day. You can see as you're trying to hold this for support, okay? Let's go to the 1-day so we can get some more candle action. So you're making lower highs, but you're holding this base. So at some point, unless it just capitulates, you're going to see some type of move up. Okay. You'll see some type of move up to give you this beautiful double top type structure. And you can just quite simply, because this is a broader fib expansion here, you could quite simply pull a fib and get your retracement levels that way. I like 786 on rebounds, part of geometric trading. So that's 75.35 up here at this level if it was able to get there. And it may never get there, but track so many things, trade so many things. I don't worry if I miss a single trade. But if you are focused on the CAC, then definitely look at the retracement levels and look at the broader market picture as well. The American markets, with the disastrous bubble that we made, will be driving these markets. Just under 30 minutes. Give us a follow on Twitter, guys. Like, subscribe. Hope to see everybody in the Discord. Have a fantastic weekend, everybody.